Go.
Reeves and I had Expedia Group Inc.
This is kind of a rundown of what our presentation will look like. We're going to start off with Expedia and what exactly it is. Expedia Group is the world's travel platform with an extensive brand portfolio that includes some of the world's most trusted online travel brands. As you can see right there, there's some of the brands within its portfolio. And we chose Expedia because it's currently within our technology holding FDN, allocating for 1.83% of the holding.
And then the correlation analysis, if you can see, EXPE is correlated with the industry at 0.29, and it has a correlation with the market of 0.36. And then among its peers, the highest correlation is with TripAdvisor with 0.37. And then some financial analysis. Some key ratios that we found interesting was the return on assets for Expedia was 2.86 compared to 6.07 with TripAdvisor. And then the return on equity is much higher for Expedia with 14, and then TripAdvisor's is 9.57. But if you look, the financial leverage or the equity multiplier is 5.4 for Expedia and only 1.71 for TripAdvisor, so it's much higher. And this just means that Expedia has much more debt than TripAdvisor, and so that could be a reason that return on equity is higher for Expedia because it is being boosted by the amount of debt they have. And then a sales forecast, so we use the sales from the past 10 years. And use the arithmetic average, the geometric, and the regression equation to get our forecast. And we decided to use the average of all three of these as our forecast, which is 13,453,298.
Yeah, so right here you'll see that is constant, and you can see that our forecasted revenue is the same, which is the average, like he said, of the three forecasts on the previous slide. As you can tell by this, the selling, general, and administrative costs are kind of high percentage of the revenue, and we believe that's because it's a growth company. And with the coronavirus, we think that number will decrease a ton because they spend about $5 billion a year on advertising, and the CEO said that they will anticipate less than $1 billion in advertising this year. And you can see our earnings per share is $3.96. And due to the coronavirus, we anticipate that will be much lower as well. Right here we have our two models to determine what we believe the price is. We think that the two models that are most relevant were the constant free cash flow model and the price to earnings model. As you can see, the price to earnings is $106.92, and the constant free cash flow one is $163.13. So we took the average of those two values, and we came up with an intrinsic value for $135.03. So that's what we believe the stock is worth pre-coronavirus.
And so as a result of that, we currently view EXPE as a buy.
Yeah, we recommend that the Nancy and Phil Saunders Memorial Fund purchases 15 shares of EXP. We came up with that by doing 5% of the Memorial Fund instead of the whole 15 of the technology sector. So we came up with the 15 off of the $20,000 in price level that was on Sunday for the Memorial Fund, which will total to about $948 invested into Expedia.
And if anybody has any questions, feel free to leave them in the discussion board, and we would be happy to answer them either then or in class on Tuesday.